Hi, everyone. This is my first podcast episode, and it's with someone that I've been looking up to for a while now because he trades the same style as me. And his name is Brad Wolff. Am I saying that correctly? Brad Wolff?
There you go.
Awesome. So we trade the same style, and there were a lot of things that I've been meaning to ask him. I wanted to get his perspective on, and I think that he has a wealth of knowledge that he could share to people on the same journey, but more beginner or intermediate traders. So I wanted to get his thoughts on it. So I really appreciate you being here with me, Brad.
For sure. And just going back to the topics you asked, we can talk about really. I'm open to anything, so don't feel worried about asking a question. There's certain
Okay.
there's some personal things. So I'm just I'm kind of regulated with FINRA and certain aspects of that. So there's a few.
Of course.
I have to be careful about answering a few things, but I can certainly give any sort of generalities.
Cool.
So,
good to know.
On my end.
Okay, cool. So I guess where are you located, by the way?
So I'm in Dallas, Texas right now.
Dallas, nice.
What about you?
I'm in Toronto, Ontario.
Very cool.
Nice.
Yeah. So Dallas, Texas. Grew up in Arkansas. Yeah.
And how'd you get into trading? How did your career path get you here?
Yeah. So I'm 28, and probably back around 2012, I was graduating high school, and I had a dad and brother that were very interested in the E-mini and the day trading and all that, and so I was kind of learning from them, and I was always kind of, I guess, markets, they interest me. I didn't really look at them that much at that point. And they started showing me, and everyone goes through the math of if you can trade 100 contracts, what does all that yield? And I was like, that's awesome. But probably 2013, freshman in college, I found Al's. Do you have any of Al's books?
I do have all of them there.
The blue one that's much smaller. It's the very first one.
The bar by bar one?
No, my dad had that somewhere in the house, and I was just kind of flipping through it, and reading through it, and I was very interested in it. They were very big on indicators, my dad and brother, and that was their route. And then for me, I was brand new to this, and for whatever reason, reading about Al's, it made sense. The one thing that bothered me about indicators is if you automate trading or get an indicator from somebody, what happens if the indicator stops working?
Right.
And so that was kind of my path. And now I don't know. I think what helped was, since I was pretty, I guess, Al was one of the first people I really started studying. And, I would say really just kind of looking back, what did help is I had a dad and brother that were trying to learn it as well. That was definitely helpful. But also being in college, I was able to listen to Al's trading room for many years. And, if there's a first piece of advice is there's a lot of information. I know Al says someone can learn it in 2 to 3 years. I don't think someone will learn it in 2 to 3 years. I think if you're committed, and I would start with the trading room and just really kind of going from that route. But we can go more on that in a little bit.
Yeah. So you've been trading since 2012.
Yeah, at least really studying. There's been, that's kind of the whole studying of Al since 2012. And I don't know as far as the best route. I always ask myself the question: is someone better off simulating while studying Al, or is someone better off just studying out all of Al's information? And I think part of it is there's that experience level. I think you have to have enough experience in just doing, I'm sure you understand, just doing the wrong thing enough time, being able to connect certain dots with what Al's saying. For sure.
And for me, it was more like I started with the basic, like the big technical analysis textbooks and all that kind of stuff.
Okay, yeah.
And then I got into Al, and there's something refreshing about the way that he framed everything. The way he said, like, everything matters, every tick matters, every bar matters, and he wasn't brushing over anything. So to me, it was like, this guy really gets it. And then as soon as I got into his room, and I think he talked more about individual trades earlier in his room, and he used to say, like, this bar looks like it's good for 4 points. And I'm thinking, like, how can you know that? and that's when that's
Exactly
what
where you're
started
getting
giving
at.
me the idea that like this guy really knows what he's talking about. He's not really telling us exactly what he knows, but he knows a lot of like he's the real deal. So
Sure.
that's what sold it for me.
Yeah, and I'd even just relate to that. Everybody goes through the, I know Al knows all this stuff, but is he really legit? You always kind of wonder in the back of your mind, is there something, what if he is, what if there's something not legit about it? And
Yeah,
what really kind of sold me on it was you start, and as you said in the webinar, you start hearing, if this happens, then the Bulls are going to do this.
yeah,
And you start thinking, if he's saying that, there's no way he wouldn't act on that.
yeah,
You hear him, call the shot, so to speak, enough times.
yeah. And it just like you just go over it like multiple times. You hear him do that, and I think because I've noticed more now. But when I first started, my first experience with Al was I was reading reviews about him,
Sure,
and they
yeah.
were often so negative.
It's hard.
And yeah, and I'm thinking like I started looking at reviews because I was so engrossed in what he was saying, and then this other community of people saying like, no, he's all he does is say both sides. He doesn't know what's happening, and so that really threw me off. And then I'm like, okay, let me just give it a shot in the room. And once that happened, I was sold. But it's most people will not go that far, and they're gonna be turned away from Al because he doesn't show his statements or whatever, and they just get they're missing out on so much knowledge. So what would you say like what have you seen along your journey? What would you say to beginners who are on the fence or who doubt the the veracity of his knowledge?
Yeah, I would relate that. So I started a YouTube channel. I can go into why a while back with a group of people. And what I noticed is I started getting marketed a ton on all these day trading
Mm,
strategies. And I mean, that's every video I get on YouTube is some sort of ad about trading. And, I'm sure there's an algorithm, but if you watch some of them, you'll know exactly what I'm getting at. It's exotic cars.
yeah,
It's
yeah,
very an exotic lifestyle. And, I think what I would say for people is you have to think about, you're competing, and I've heard Al say this, and you have too if you've read his books and all that. You're competing against some of the best people in the world.
right,
And these are people that spend all day of every day thinking about markets. So, as far as the legitimacy of Al's information, you've got to ask yourself, can you really learn, if someone's marketing about an exotic lifestyle and not really giving you a lot of information, you can't learn. There's a reason why Al's textbooks are, 400,000 words.
mm,
You can't just, you're not going to, if it was easy, everybody would trade
right,
and everybody would go down this journey. Why wouldn't you?
mm,
So, as far as, and you're asking about the, how would someone, the legitimacy of Al's information, the first thing I would start with is, and it's a catch-22 because you're really not going to know for a long time if it's legit.
right,
And, for me, what resonated with me is when I read his books, the first thing I noticed, okay, he's not, this is pretty wordy. This is a lot of words. It's not
yeah,
like a one-page chart. So he's got to know something. I mean, how more could you make all this up?
mm,
And what I would say for people is to get in the, especially now that without doing, he's still in the trading room,
yeah,
and no one knows how much longer he's going to do that. I would get in the trading room and really just start to listen to what he's saying. I think what really helped me was hearing him talk about both sides and just understanding just the language, the way he talks about it. He's so calm natured with the bull case and the bear
right.
case, and it's frustrating, and it's super frustrating for people starting out because it's
They
out
want clarity. They want complete
you
clarity.
yeah, give me some clarity. But but you really think about it, there's not a lot of clarity.
Mm,
And obviously people need to watch the video, of course, but I would really start with probably the trading room, and I would commit to it for as long as you can.
mm,
That's the first piece, just because I think you've got to start hearing out talk about the market, kind of as you said a couple minutes ago. Hey, he's getting, if this happens, the Bulls may make 4 points, and you got to start believing that, okay, he knows what he's talking about,
mm,
because then you'll take everything a little bit more serious. But I think as far as starting out, it's really hard. I mean, you're in essence trying to play a professional sport.
right.
That's
And
kind of the way I
you're
see it.
being thrown in with the big dogs right away. You
Yeah,
don't
I
get
mean,
a
you don't.
trial.
There's no amateur. Yeah, that's exactly it
Mm,
for sure.
yeah, that's a good way to put it. So if you had to tell someone who's starting now, you would say, would you say books first, or would you say get in the room first,
I
get
get
a
the,
sense
I
of
mean,
what
I
he
get the
said?
video course in the room. I think the books are great, but I remember, and I still look at the books. I think there's, you know, for people that I know there's an argument that Al's style has changed from the books to the videos, and
Yeah,
it may have a little bit. And I think that's really just because you start trading more, you get better at it, you start using wider stuff, you
exactly.
just become more comfortable with what you're
Yeah,
doing. But it's just the way he's explaining. He's gotten better at explaining what he's doing. It's still the same. I mean, if you really look at it, it's still the same. I
right.
would say the videos because the books are. I mean, you remember probably reading the books. It's super hard to read the book starting
Yeah,
out. So and it gets easier. So I would start with the videos and the trading room, and I think people ask this question all the time. You're not going to watch one, but you can't watch all 97 videos or however many there are at once and
yeah,
then just be done. I mean, it's kind of a never ending. You're gonna have to watch them over and over, and unfortunately, what I would say is you can't get frustrated that you're not going to understand, a cell climax when Al's
right.
talking about it on the second video. You just have to learn pieces day by day. And so, yeah, I would say get in the trading room and really start watching the videos.
Yeah, I remember you saying in one of your videos, I think you were on your fourth time through, and you're like, I'm still on my fourth time. And someone had asked you, I think they were going through it once, and you're like, I'm on my fourth time through, and I'm still learning stuff every time I watch it.
I still learn, yeah, and
Yeah.
and I try to, yeah. I mean, you're always going to learn something, and
Mm.
and it's probably more of the hard part about all this that I've started to realize is, for one, you just got to learn the information,
Yeah.
and it's the connecting the dots real time. There was a offshore Ali offshore. He wrote he's a hedge fund guy, a friend of Al's, and he wrote a article 2 or 3 weeks ago in the
Oh yeah,
trade.
yeah, about how to
Yeah.
master day trading. Yeah.
And the one thing I would give him a lot of props to is using binary decisions and flowcharts. And
Mm.
what I would, when you're learning all the information, I would really take his advice. He's got a couple articles on the website. One thing he talked about doing those when he was watching the videos, he tried to build a flowchart based on that video and help him connect the dots of, you know, well, like for example, in a trading range, you shouldn't, the number one thing you probably should do is don't buy or sell in the middle.
Right.
So if you can get that one piece down, how many mistakes do you eliminate?
Mm.
But yeah, it takes a super, there's I don't know if there's one right way to study. It takes a
Sure.
lot of time studying for
Yeah.
sure.
Yeah. Like I'm going back because I did bar by bar the first book, and then I
Yeah.
I read the three. Then I did the course, and I'm going back to the books to see if I think I like books a little bit more because I can like really focus. I can read something and then think about it and relate to what was said before. So
Sure.
I'm trying to read the books again, and I'm realizing like I did not notice that the first time I read it. Like now it makes more sense once you're in the field, you're trading, and you go back and you're like, it was right there the whole time, but I didn't know what that meant until now. And so
Yeah.
it's, sometimes it takes a while. You need to become a different person and read the book again so that you know what he actually meant when he said it.
Yeah. And two things to add with that is you're going to have, and this is the other kind of evolution, you're going to have one viewpoint on your thought process of trading when you read something, and it's always going to be evolving.
Right.
Never, that's why when people ask Al, Al says someone, always in is always a popular thing people are always asking Al. And then
Right.
you'll hear him say that most professional traders don't trade always in.
Hmm.
And it's kind of what, and you start thinking, well, why, if that's the most popular thing, why is that?
Right.
And it's just the evolution of the way people look at the markets. But going back to the books, another thing that's really important is if you can find the chart, especially if you gives the kind of a year on it, try to pull it up on historical data
Hmm.
and follow along. If you got the book, if it's the SPY, go back to 2014 and read it, but also, look at the chart.
Right. Yeah, that's a good point. Were you the one who was always asking, can you talk about the always in direction in the webinars?
I do remember asking that. You see, you've been in the webinars for some time.
Yeah, because the first question was always, can you talk about the always in direction?
Yeah. So I remember, that's back when I was in college. I was watching all the time, and it was just, I mean, I was trying to paste it in there as quick as possible. But, I
Yeah.
remember being obsessed over always in, and it
Yeah.
was good and bad because I remember taking it too literal and trying to literally be in every turn, and
Yeah.
you start to realize that's just it's a dumb idea.
Yeah.
You're just gonna get chewed up so much. But yeah, I think there's, always in is a great way to start and just kind of get in the overall right direction for sure.
And so for people who don't know what always in is, can you explain that briefly, like your understanding of it?
Yeah. So if you had, Al always says if you had to be in the market and at this second, so if you were gonna pick a direction, that's the always in direction. Now the challenging, the challenging part is most of the time in a trading range, by the time it's always in long, you're at the top.
Right.
And that's a really, that math becomes really difficult. And the other small portions of the time, it's clearly in a trend. So a lot, you asked, small pullback bull trends. I know that was a topic you brought up, and that's a really difficult topic for people because if you think about, it's a tight enough channel that looks like a leg in a trading range, but it's just a little too tight, but it's not quite strong enough to where you really want to buy.
Right.
And that traps a lot of people. But always in is, it's if you had to pick a direction, what do you think has the better chance?
And pick a direction for like the next 5 or 10 bars with a reasonable stop, reasonable target in that sense?
Yeah, swing trade. Yeah, reasonable stop, reasonable target. So, if you can, for a swing, you always know where the stop is. It's usually, if it's a trading range, it could be at the bottom of a trading range,
right.
Prior high or low in a bull trend. It's always obvious. But the challenging part is, if you think about the logic, and this is what I think is really important. I've got an Excel sheet I can show you in a little bit that I think people will like is, if you think about the logic of the market, it's, why do we have a market? It's to make trading efficient. So,
right.
Al talks about that in the first video. And by definition, that means the probability has to be around 50%. Right. So what people, always ends important, but I think it's also, people need to realize there's going to be plenty of times where it's best not to be in the market.
Right.
So even if, you get a strong bull breakout at the top of the trading range, it doesn't mean you should always buy.
Yeah, I think he says it more now than he did before, but he says always in long, but not a good buy, or not by the close. So it might be always in long that the probabilities are higher in one direction, but because of the context of the market, probably better to buy a pullback, buy a little bit lower, closer to support. So like, I think he always makes that distinction now. I guess because of all the questions about people buying always in long, but buying way too high in a trading range.
Yes.
Yeah.
That's exactly. And one of the things people have to think about is probabilities. And, we always hear Al say, if you can be 60% profitable at 1 times your risk,
right.
That's profitable. And what people don't understand, though, is Al is saying that that's marginally profitable.
Right.
It's enough to, have $1 more in your account than, prior. Right. And one thing, let me share my screen real quick and I'll show this.
Yeah.
How can you see my screen right here?
Yeah, I can see that. That's the one you shared in your video as well, right?
Okay, yeah, I forgot I shared something similar to this. Perfect.
Yeah.
So what I've done here, it's basically the trader's equation. So you have your reward, and this is for an E-mini, and I factored in $5 commission. Right. So if you're going for half your risk, you're going for $100, but you're paying $5 in commission if you win, and you're risking $200, but if you lose, you're paying $5 for commission.
Right.
And if you're right 73% of the time, you'll yield basically $14 a trade. In the middle one, it's if you're going for 1 times your risk. So you're risking $100 to make $100. But you're only going to make 95 if you're right, and you're going to lose 105 if you're wrong.
Right.
At 60%, you'll notice you'll make $15.
Right.
So you'll notice these two are the same.
Mm-hmm.
The bottom one is going for twice your risk, and the reward, same thing. You're going for $200, but you're paying $5 in commission, and you're risking $100, but you're going to lose $5 if you're wrong. At 40%, you're going to yield the same return. So if you had to look at these from an objective standpoint, the easiest one to achieve, especially starting out or really at any moment, is this bottom one right here. Right. And what I would tell people to focus on is everybody wants to focus on these two. And people, especially since, Al's a big scalper, he scales in, they say, well, I want to be like Al. I mean, I remember being in a webinar and I was fixated on wanting to think like Al. Why not? But what I didn't realize, and many people don't, is to really get this. I mean, you have to be in the 80% or higher, probably higher than 80%.
Right.
So if you're looking at twice your risk, most people are going to be better off going for try to get your percent profitable to 50. This is you're way more likely to achieve this bottom one than being 85% profitable, risking going for less than your risk.
Right.
So if there's one thing I would say for people starting out is swing, and that's why Al says swing trading is much more, it's a much better approach for most people. And most people prefer to focus on this. Al focuses on this.
Right.
But what you'll hear him say is most of the time swing trades aren't that great, so he scalps out. So that was all I wanted to really say with that, is just reiterate the fact that you have to, and math's boring. I mean, I'm not, it's a boring concept, but if you're gonna figure out the whole trading piece and really study trading, that's all trading is. It's math, and love it or hate it, you have to figure that out.
Right. Yeah, we can talk a bit about that when we show the charts, but
sure.
I think like part of my challenge as well is when you take the swing trade and you introduce, because the swing trade at 40% with a 2R, looking for 2 times your risk, that to me seems like a very laid back approach. Like you just take the trade, you will put your target 2 times your risk, and then you just wait.
Yeah,
but when you start to introduce, when you're disappointed, you exit. For me, that's like, that introduces my discretion and my ability to make bad decisions, to say, well, this doesn't look exactly like I want it to, or it should. And I find myself not always exiting early, but misjudging what is disappointment in this situation and what isn't. And so what I think it happened on Friday too, like what should be a good swing, I see a tail and I see that it didn't close above the prior bar, and I'm like, you know what, this is probably not the best way it could look, so I'm just gonna take it off. And then you miss a big swing. And so that's part of my challenge, is that when you're swing trading, and maybe you can share some thoughts about that.
Sure.
You're taking a 40% trade, but at what point do you trust your discretion to say this is disappointing, this isn't?
Well, and that is, that's the great question everybody has, is, everybody hears Al say, if you just do an order cancels order, buy above the bar and risk go for 4 points and you'll be profitable, and just go to Walmart. Well, everybody tries that, but they keep losing, and they say, well, I've got to manage. They figure out that they need to manage the trade.
Right.
The problem is that just takes an understanding and experience and understanding of, how things react. So as far as, and part of that is most stop entries don't look great. If you look at the, pick any market, whether it's the daily chart or the E-mini or just the 5-minute chart, in the trading range, that stop entry never looks like it's going to be the low of the day.
Right.
And it's because if it was really that high probability, it would raise up.
Right.
So most stop entries, there's always going to be something wrong with it, and you can increase your probability, as you said, by giving yourself discretion and being quick to get out. And you can take lower probability stop entries, especially if you can get out quickly.
Right.
But it becomes tricky, because when do you get out quickly versus when do you stay long? So that's a tricky part.
Can you answer that for all of us?
Yeah, well, I mean, that's kind of the, someone asked, it's kind of funny thinking back, but someone asked Al, Al, how did you figure out all the probabilities? You have to look at charts long enough. And the biggest thing I would say with all that is, you have to understand, when Al says it's 40%, 50%, or 60%, he's just classifying it in a category. He doesn't know if it's 44%, 39%. It's low probability. And if it's 50-50, it's somewhere in the middle. And, so people tend to take probabilities a little too literal, in the sense of you're never going to quantify what the exact probability is.
Right.
And people have to get, that part of that, you just have to get a little comfortable with, okay, it's somewhere in the middle, so maybe it's around 50%.
Yeah, and I think the most important thing, you mentioned this a lot as well, is just knowing, I mean, whatever you pick in the spectrum, just knowing that it's probably within 40 to 60% will help you make better decisions. As long as you're not, because I know when you start out, especially when you have very little data, This happened to me a lot when I was starting out, and I would have like very few examples, and the examples I had worked. So I'd be like, this looks like it's probably 75%, 80%. And over time, you realize that it can't be. You can't get 80% first swing.
Mhm.
And as you get more data, you realize that these setups are not as good as you may think as a beginner because you just have limited information, limited data.
Yeah, I'm glad you said that. And one of the things people misjudge is, let's talk about discretionary trading. You can manage a trade and increase the probability. That's
Right.
way different than just buying above a bar. Because when you buy above something, the probability, there's a variable there. But when you
Right.
start to manage it, you increase the probability. And what people misunderstand all the time is what you just said. Most trades are not 60%, and most trades are not 40%. They're somewhere in the middle. So if you buy a breakout that's close to the top of the trading range, thinking it's 60%, well, the question is 60% of what? It might be 60%
Mhm.
that goes 1 point higher, or but the variables can change so quickly. And one thing that screws people up all the time is they buy at the top of the trading range and they don't realize that the window they have from when it becomes 60 to 50 can be really, really quick.
Right.
And most people risk too much and they can't get out quick enough. They get paralyzed or trapped in the trade, and they panic, and they just everyone's taking the big loss when they should
Mhm.
have gotten out many, many bars ago.
Right. And that's a struggle I think with wide stops as well for beginners, because you you put the stop where it should be, but then you don't manage it appropriately for the wide stop, and
Yep.
you let it get hit. And I've been struggling with that for a while. That you put the wide stop for probability, but then you lose the probability when you don't manage appropriately, and then you end up taking those big losses that, had you read the price action correctly, it should be a very marginal loss. Maybe you see 2 or 3 consecutive bear bars and you exit, but you're hoping at the top of a trading range that it's going to break out when it's probably not going to. And so that's the problem with wide stop, is that, yeah, you can increase probability, which is what most people want, but it's a dangerous game because if you don't manage it, you can end up really hurting your account.
Yeah, and one thing to add with it, everybody's done it to where they scale in and they start going for 2 or 3 point scalps, and they rack up. They get their right 10 times in a
Mm,
row, and they're like, "Wow, I made all this money so quickly. This is the way to do it." And then they take one more trade and they lose all of it the very next trade.
yeah.
And that is the fallacy with it. You have to be able to get out quickly. What you just said is you have to be able to cut the loss after one bear bar, 2 bear bars if you're long. You hear Al say it all the time. He'll use a 30. I've heard him say, I used a 40 point stop.
Yeah.
He'll often I've heard him say he'll just drag the price ladder down in the trading room, and he don't even really know where it is. He just knows it's there.
Yeah.
But he's never going to let that get hit.
Of course.
And
Yeah. And
most people can't do that.
yeah. And I think that it's exactly what you said. It's like once you get so comfortable where you're looking at a bare leg in the trading range, and you're like, the odds of this collapsing are very low. So I'm just gonna take my stop away so it doesn't get in the way of the trade and just focus on the bars. And when the bars look like they're not, they've lost their edge, I'm gonna exit. The stop is just for a catastrophic in case his computer shuts off or whatever.
Yeah, and one thing I want to be, I don't even want to get the wrong impression with
Yeah,
that
yeah, of
either,
course.
though, because
Yeah.
that doesn't mean most people doing that are risking. You've heard Al say it. People ask him, how much do you risk per trade? And he says, if you had to guess, it's probably less than 0.5%.
Right.
So they're also, at that level, they're trading super, super small. And,
Right.
that's a very dangerous thing for people starting out. It's just, you know, you want to be very careful with that.
Yeah, and that's a good point because when you watch someone, I mean, he's been trading for over 30 years. And
Hmm.
so you're watching someone 30 years in, and the instinct is to copy them. And like you can't do that. You're still at year 1 and 2 or year 5, 7. You can't do the things that he does. I think
Sure.
that, and so that's important. And he always says, like, trade small. He has the advice he gives, but most people who follow his work want to trade like him and do what he does. And I think it comes down to what we mentioned earlier. It's like it's a professional sport. This man is a professional, and you can't do what he does, and you shouldn't try. You should listen to what he's saying and not do what he's doing.
100%. And, because I remember thinking that way, where I'd be in the room and everybody wants to mimic Al. And I remember being, even in college, super, watching Al all the time, watching the videos and getting super stressed over just why can't I comprehend what he's saying?
Yeah.
But you're right. There's that level of, you can only learn so much so fast. And then there's you have to have the experience. Even the Al, he's a big sports guy. If you listen to him in the trading room, he'll talk about it often. He'll even say, like the LeBron James, even if you get to that level, there's still a threshold that you've got to meet just being at that level, just experience.
Yeah.
So I think, that's one thing. I think people need to have the right expectation that it's going to take longer than they think.
Yeah.
And they can't let that also demoralize them or they'll quit. But they have to know that it's not a 2-year deal, and there's a lot of it's a journey.
Yeah,
for sure.
100%. And I want to get into the actual details of trading management a little bit later, but we kind of skirted over it, but I wanted to talk a bit about your journey through, like, your improvement journey. So what, like, was it a straight line up for you, or because you had
yeah,
brother?
but yeah, how was the path to figuring everything out? And I think people should measure more starting out as, if they're going to pick Al, only study Al.
Right.
We obviously think that's the best route.
Yeah.
And they should measure the level of comprehending, how much are they learning about this information, and just throw the, being profitable portion out the window. But what I would say is it's never going to be a straight line. And I mean, I remember the frustration, especially in college, the frustration levels of just trying to learn all this was, huge emotional swings. I mean, I remember, there was probably a year and a half into this, I got to, traded the E-mini, and I remember lost $200 first day and then made like $320 in a day. And I was so blown away. I was like, wow, this is crazy. And lost it all the next day. So, and that's everybody's journey over and over. So it's, it's you take 2 steps forward and 1 step back. And, that's what causes people to give up with it is, the problem with, if you're learning how to trade, you're kind of learning a skill set like a business.
Right.
Well, the problem is businesses can sell a product and they can measure success based on selling a product. I mean, you can't really do that. I mean, you're either profitable or you're not, or you either have it figured out or you don't. So it's a lot of up and downs. And, I think people really have to figure out, how, do they really want to learn how to trade? And it's not easy. And the unfortunate part is you have a lot of people marketing how to trade and, products, and they want you to think it's easy because that's how they get money. And, that's unfortunate. And that gives people the wrong expectation. I've had a lot of people ask about it, just trading in general. And what you realize is, and that's part of the reason why I like the YouTube stuff and just the, talking to a direction of people, just because it allows me to share my thoughts. But also you realize, you've seen it too, I'm sure, just watching out for so long. You start talking to people, and then, there's not everybody, but there's certain groups that just kind of fade away. And, you notice they stopped following Al at some point, probably just because, they were disappointed enough. And so I don't think anyone's journey is a straight line. And even, you've heard Al say that. So, I don't think anybody's just had a straight path to figuring this out. And I'm certainly not there in terms of figuring everything out. But, I guess it's nice to learn all this at a young age.
For sure.
And you're in the same boat.
Yeah.
So
I just turned 32, so
yeah, you're only a couple years older than me.
Yeah.
For sure.
So yeah. So sorry, no, you go ahead.
No, you're good.
Okay. I was gonna say, were there moments where you felt like, this is not for me, or I need to find a different style of trading, and like, how did you overcome that? Because I know that's something this complex. I'm sure everyone probably goes through that at one point or another.
Everybody does, and I'll take the cop out. I was fortunate to have a dad and brother figuring this out too, so there was definitely that kind of helped push me along. But I remember, definitely, it's been the most challenging thing I've ever done. Frustration level, and just, again, everyone's done it, whether it's simulated or live. They'll trade and they'll lose for months, then they'll be profitable for a couple of weeks. And they finally, you feel on top of the world, you finally figure this out. And then what happens? You lose for another 6 months.
Yeah.
And you just feel it's demoralizing. It's totally defeating. And, you start to, I remember just thinking back, just even on days, you look back and you think to yourself, I don't even know what I did wrong. You lose, whether it's simulated or live, whatever, you don't even know what you did wrong or where to even begin. And, the biggest thing I would say, and there's one thing I learned, especially in college, was those days that really, really suck where you lose a lot or you don't know what you did wrong. Sometimes you have to just, after the market closes, give yourself an hour, give yourself some time because you got to calm down emotionally and study that moment, because there's always something you can learn. And the problem that people have is they don't want to dissect the bad experience, so they don't learn what they're doing wrong.
Right.
But yeah, there's definitely, everyone goes through those difficult parts, and it's not, for me, there's certain difficult parts now. It's not so much trying to, it's not the same difficulty, parts. It's not, if I did something wrong, I can look at the chart and understand it. There's other factors at play, but everybody it's never a straight line. And I think if anyone ever says it's a straight line, they're lying.
Yeah.
There's always,
what is it like in those moments when you're like, I don't know if this is for me, or maybe there's a different style out there that might be better suited to me? What keeps you on track? What keeps you motivated to keep going? Or what did, at least, when you had those moments
sure,
of...
no, yeah, there's still, for me, there became a level where I understood that I believed Al, what he was saying. I knew he was profitable. And that isn't, how you get there, probably listening to the trading room and just studying enough to understand, okay, he knows what he's talking about.
Right.
And I think it's super important to get to that threshold, because then you got to believe that the person that's teaching you knows what he's talking about, or else you're totally doomed.
Right.
And as far as that, you're asking in terms of how do you get through those difficult parts. I think in part for me, I always liked the way Al was explaining things, and I always liked how his chart was super clean. And so I said, okay, if there's anybody, if there's any shot at doing this, then he's probably the best. He's the best person to learn this from.
True.
And I don't know. For me, it was kind of it wasn't necessarily there. I don't know. There's something about looking at markets and trading and just this idea that you can, everybody's looking at the same stuff and you can do it anywhere in the world, and you can, I don't know. It's just a fascinating concept. It's kind of hard, but there are definitely times when I wanted to stop, for sure. And there's definitely points when I think everyone kind of gets a little numb to just emotions. I'm trying to think back. But for sure. There's definitely moments where it's not that enjoyable.
Yeah.
I remember it's kind of, I remember going to class, I was in college, so I'd bring my computer and I was looking at charts or something on TradeStation and just like looking at the market while in class. And, I remember the probably the most demoralizing part was you take a trade on the open, you'd be profitable that day, and you take another trade 30 minutes before the market closes, and you give everything back. And you would just think to yourself, if you would have done nothing, if you'd have just stopped, you'd have been fine.
Right.
Or those days where you have a good week and it's Friday, and you lose everything you made that week in one day, and you're thinking, well, I could have done anything except watch the market, and it would have been better off than where I'm at now. And and part of that, it's you've heard Al, it's the school of hard knock. Everyone's got to pay that theoretical tuition of learning. So I think the biggest thing is, for me, I started to really like the challenge of trading and watching the market and studying it, and it became more fun. It's just and I think people have to figure out if is it the thrill and the chase of trying to achieve something, or why does someone want to study trading? What's the point behind it? It's kind of, as Al said, if it's a hobby, then it's an expensive hobby. You should find something else.
Right.
But if you want to make a career out of it, then sure.
Yeah, I think for me it was like, I think the struggle comes from the expectation that we go in, like with what Al teaches. He said it took him 10 years to figure out how he wanted to trade the market, but that's not what you hear everywhere else. And when you don't hear that and you think, well, some people are getting it in 3 months with their style and they're getting it in 3 years, and you're thinking, well, I'm way deeper in. But I think what helped me, or is still helping me, is to be anchored to that 10-year mark. Is like, just give it 10 years and accept that it may take that long, because you're trying to master something extremely hard. So
absolutely,
if you change the expectation that, hey, this may take 10 years, then you're on year 5 or year 6 and you're still, like, you're getting better, but you're still missing some things. Like, it's okay, you have 4 years left to figure this thing out. That's going to get you one step closer. And I think, like, one big thing for me was, I think there were a couple moments where I was like this is ridiculous, like 5 years, 6 years, and still making the same mistake. And then I came across this chart from a year ago. Like, somehow I was looking through my charts, and I think it was like, maybe it was like March 2019, and I had my trade set up, and I'm like, I did that in March. Like, I would never do that now.
So glad you just mentioned that. Yes.
And that one, like, looking in 1 year increments and looking back and like, wow, like, right now I feel like I'm struggling, but 1 year ago, if I'm this much better than I was 1 year ago in 1 year, I'm gonna keep going. And that's kind of what gave me the drive to keep going.
You remember the Ask Al videos that Richard would create whenever they were making the course?
Yeah.
And you're probably in the room during those questions. And I remember, looking back, I remember those days. I remember being in the trading room, watching the market. And I remember how, there'd be an Ask Al question, and I'd go back to that chart and I'd listen. I remember thinking, I can't believe I thought this 2 or 3 years ago.
Exactly.
This chart's easy to see. It's easy to understand what's going on. How could I have thought this way? Or, you look back, as you said, on the trade, and you're like, wait, I did that? That's the dumbest thing in the world.
Yeah.
So, yeah, I mean, it's very important to, I think, have a little bit of grace on yourself and look back.
Yeah, exactly.
And realize the progression that you're making. And going back to that whole 10-year comment, the first year, I mean, every year gets easier. So the one way I look at it is, if I keep doing this, every year is going to get easier.
Right.
I'm going to get better and better every year. So if I can make it through the first, second, third year, then the fourth year is going to be easier than the third. The fifth year is going to be easier than the fourth, and it just gets easier.
Right.
And people, because of all the marketing on social media and all the, Robinhood stuff, people want to think that they can be profitable in 3 months. And you're right, when your expectation is, I'm going to be profitable next week, you're asking for the very short career in this. And for sure.
Yeah. And I think, we're kind of, it makes sense, because the fact that the 90% of traders fail, but we're still all doing it. So we clearly think that we're the 10%. And when someone says, well, this can take you 10 years, I was like, yeah, it took you 10 years, but it's going to take me 2 years, because we all have that in us, that we're going to beat the odds. And I think that kind of arrogance comes through. And when you start feeling bad about where you are at year 5, it's like, yeah, of course you do, because you thought you were going to do it in 2 years, because you thought by just a simple act of you trying to be a professional trader, you already had it in your head that you could beat the odds.
I want to add one thing with that, about the whole 90% of traders fail. Al talked about that. And he said, if you think about it, that's the same comment as saying,
yeah, everything else.
All golf, people that golf suck. Well, how many of those golfers are hobbyists? They never had the intention of making a career out of it. And if you remove all the hobbyists, that number is much higher than you think.
Right.
And to your point, though, yeah, you have to look at it. I think that looking back on past mistakes and realizing your evolution will give you more motivation to move forward. And I think that's part of it. Looking back, I remember being super stressed and hard on myself, and just being very bitter about a lot of aspects of trading. And, I kind of felt like I didn't have a choice but to learn it. which was helpful at the time. But I would have been much more, if I could go back, I'd be much more reflective on the mistakes I made and trying to pinpoint, okay, I'm learning this, and that's a positive. I don't know if my route was the best way in terms of, I was just very, I don't know, not aggressive and bitter is not the right way to say it, but just kind of, there was a way I probably could have handled the learning how to trade in a different way. That's probably just more, healthy mentally.
So if you could go back, what are some things that you do differently?
The first piece is what you said, and nobody, and it's kind of one of those, nobody wants to believe it when they're learning. So I'm sure everybody says this, but you're not gonna, I had the expectation that I could learn how to do this and be profitable in like 2 years, before then to college. And I was very wrong in many, many ways. And, I think it's unmet expectation. You have to have, it's aggressive patience where you have to be aggressive with learning. And, you can't just, I'm going to watch one video a day and hardly study and maybe I'll get there. Well, that's not going to work. But you also have to be aggressive with studying, but you also have to be patient with understanding that it may take you 10 years. And what I would do is I'd be much more interested in just learning and okay with the fact it's going to take a long time. And, the one thing, the more you study, the one nice thing is the more you study, you start looking at charts and you can kind of understand what's going on. Then it's more of it becomes more of a psychological piece where you're not, you're trading in the middle of a trading range, even though you shouldn't trade in the middle of a trading range. And how do you prevent that?
Right.
So, what I would do differently is really focus on studying and just be okay with it may take longer than 2 years. It's probably gonna, it's gonna be north of 5 years probably.
Right.
And it just takes a long time. And no, that's not what anyone wants to hear, though, is the problem.
Yeah.
So, that's the biggest advice I would give is, number one, I know Al says you got to be happy. And, I think that's one thing I've just tried to be more of is okay with the fact that it's not going to be a short journey. It's going to take a while.
Yeah. And I think that's a really good point is that we, with the expectation comes like when I get there, when I make it happen, then I'll start to enjoy the trading. But if you realize it's going to take you 7 to 10 years to really get it, then you really want to be unhappy for those 7 to 10 years until you become a trader, the trader you want to become. And that comes down to expectation that if you realize your job today is to learn a little bit more than you knew yesterday. And even if you lose money and even if you feel like you're not getting it, if you learn this one lesson, then that's the process. That's loving the process where you can actually enjoy still being bad. You can't only enjoy when you're good, and you have to spend 7 years being miserable. Right. So like I think understanding that your job today and my job today is just to figure out one trade. How could you have made an extra 1 point or lost 1 point less? And if you can figure something out, one lesson that you can take with you, then you see that as a success. And that's one stone or one step in the right direction.
And I'll add on that. And that goes into when you're learning, everybody, everyone what's the classic question? What's the strategy? What's the setup? How do I get profitable? How do I figure this out? And the problem with that is the better route to take is to be naturally curious. I remember being, going back, I was naturally curious. I wanted to know, how is Al scalping? How is he scaling in? Even though I knew I probably shouldn't try it.
Right.
And I did, but why is he doing that? Just asking the why behind all these pieces, or, just being curious as to what's going on. And, too many people get wrapped up with being very concrete with rules. Right. And everybody wants a rule and everybody wants this. And if you go to one of Al's books, he says, this isn't, here's a list of guidelines. They're not rules.
Right.
And what you'll notice when you start to listen to Al more, and you've obviously noticed this by this point, is he's very flexible with what he says.
Yeah.
He's not really, there's, what is his favorite? I mean, I know he likes breakouts, but as far as his favorite setup, it just depends on whatever the market cycle is doing. So that is, I know people hate that, and just as far as overall, I think people have to just be flexible and naturally curious with wanting to learn why the market acts the way it does. And if you can figure that out, the rest will follow.
Yeah, that's a good point. Yeah, I think we covered my next question, which was what did you do each day as a beginner to like what was your daily routine, daily practice? Was it just trading the day and then spending an hour afterwards and trying to figure out where you went wrong?
So what helped, I was fortunate just with the timeline of my age. I had a lot of free time with college. So I was able to kind of shift some classes around where I had a lot of the trading time. I'd kind of take some class early in the morning, then a lot towards the latter portion of the day. But what I did is following out in the trading room and, simulating the e-mini and trying to follow along. And, that was my experience. And then, studying the books, studying the videos, all that, is it better to just study the videos and just be in the trading room and not simulate? I don't know. I think you're always going to look back, and I'm always the type to make, what should I do differently? And the part, and I mean, half the time it's just going to be moving forward in a direction. Right. I remember I don't know if you were ever this way, but just wrapped up in what video do I watch? There's 117 videos. Shall I watch this one? Shall I watch this one? And you get so paralyzed with trying to figure out what you're supposed to study. And that's what's hard for people starting out is there's so much to learn. And as you know, you've got to kind of understand a little bit of everything to move forward. So it's like, what do you study? So I would just, if you make a decision, watch the trading room, watch the video course. Really, if you're starting out, probably watch the trading room and watch the videos. And, and 6 months from now, maybe take some simulated trades.
Did you start off paper trading or did you start off with
paper trading a long time? Sure.
Yeah. How long did you paper trade for?
Years.
Oh yeah.
Yeah. I mean, there's been, and the other thing I would really start doing, especially for right now, is for one, don't trade the e-mini. And now there's the micros. I'd focus on, should you focus on the micros? Should you focus on Forex? Maybe a little bit of both. I think it's for most people trying to risk $100 a trade. It's probably not a good idea.
Yeah.
And the other thing I would focus on is, the one thing you'll notice Al is very comfortable with is just being, looking at any market, look at a daily chart, 15-minute chart, 30-minute chart, and just being okay with it. What people end up doing is they analyze the market in a way of how do I maximize the most money instead of how do I just follow along with what the market's doing. Right. So if you're watching a daily chart, it shouldn't be any different than 5-minute e-mini chart. It should all be the same. Right. So, it just, as far as starting out, you got to study. I don't know if there's a perfect. Yeah. I don't know what the perfect route is.
But you gotta give yourself time and accept that it's going to take time and just put your head down and get to work.
Yeah. And, you're not, they say you only retain like 10% of what you learn. Right. So you're going to have to watch the videos over and over. And I'd probably watch a video, watch it again, and look at the charts and just move through.
Yeah, that's good advice. And so how has that changed now in terms of what you do daily compared to what you did as a beginner?
Daily is more every day. It's more looking at charts. I still watch the videos. I still read the books when I can, but it's definitely more of practicing. Now we have the luxury of just with technology and all that. I mean, it's so easy to just pull up historical data. So really just reviewing charts and just trying to kind of analyze it, just kind of following through it. And I think one thing, there's a video I released a while back about, he kind of explained how he does the daily write-ups at the end of the day. Yeah. And makes those charts. And that's probably a good idea. I think even Richard gave everybody the drawing objects in PowerPoint. Yeah. So I'd recommend taking a screenshot of a chart, trying to write it up similar to what Al does. That'd be a good one. And so for me, it's more looking at charts, and just analyzing things and just kind of thinking through different pieces.
Nice. And so more on the trading side now. Would you consider yourself a swing trader, or are you kind of flexible with what the market gives you?
Well, probably more flexible. And, I want to kind of go into generalities here. What I think people should really focus in on is, well, the one problem with the micros is for most people, they only have one position size.
Hmm.
And what that causes people to do is to be very rigid. Whereas if you're trading something like Forex, or if you can trade an account balance where you can risk 0.5%, let's say. And if that's 5 E-minis or 5 micros, that's great. Or otherwise, trade a Forex account.
Right.
And it allows you to be flexible. You can take part off, where you can, if you like the stop entry, but you think it's 50-50 and maybe the first reversal down will fail, well, trade a half size and then buy more if it reverses. So, I think the most important thing is having the ability to be flexible when depending on the market cycle. It's a problem if someone's trading the market and they have a strong breakout, but the breakout's too big. They know they want to buy, but the risk is too big. That's a red flag that you're probably better suited to trading a different market.
Hmm.
People don't like to hear that because everyone's got a small account size. They're trying to figure things out, but that's reality. If you look at, and I think it's also important, think about hedge funds and institutions. How do they trade? And if you really think through it, they're going to have a certain risk parameter. Maybe I'm just making up numbers. I have no idea, but maybe that's 0.5%, or maybe that's 1% of an account balance.
Right.
And in theory, the more the market goes up in their way, their risk gets bigger. So they have to start scaling out of the position. The more it pulls back, they have to start adding on to their position to get it back to 1%. So if you're in a position where you're deviating from that because the risk is too big, that's a problem. And most people, what do most people do? And they'll trade I've seen it all the time. They'll trade the E-mini, and instead of putting their stop below the swing because the risk is too big, what do? They put it below a signal bar.
Right.
And they get stopped out and they mismanage the trade. And it's kind of never in the cycle of they're not trading the way everyone else is.
Right.
But yeah, I think people should work on being flexible with the market cycle.
Yeah, that's good advice. Is there a setup? I guess with reading every bar, I mean, Al talks about how he can see a setup on every bar. We're obviously not there yet, but
yeah.
Are there particular or specific setups that you look for, or are you just flowing with the market?
It varies. I mean, everybody likes a trend or a breakout. Sure. I mean, everyone likes when the first 2 bars of the day are huge and you can buy and ride it up. But what happens more often than not, kind of like Friday or a small pullback trend day, where it's channeling up and it's hard to stay long, but you don't want to sell.
Right.
So as far as favorite setups, probably breakouts. I try to just, if I'm going to look at a market, think through what the market's doing. I think that's really the best way. And also it kind of, the other piece with that is you have to, you don't want to favor too much of a setup because it kind of gets into emotions where everybody likes a trend day, but everyone knows, how often you get a trend.
Right.
20% of the time, 30%, not that often. So it's really important to be able to analyze the day and say, okay, what should I do? And that's more often than not, maybe that's nothing.
True. Yeah. I've noticed for me that I'm happy you said that, because when I noticed about myself, when I pick these setups that I like or wait for,
sure,
then I give them more attention and meaning than they deserve. So I'm like, oh, this is the setup I'm waiting for. I can't let this pass. But what if there are other factors that tell you that maybe you shouldn't be taking in the situation? Maybe it's too high in the trading range, but this is my setup. I have to take it. Or you take it and the entry bar, follow through bar aren't as good as you'd like, but you've been waiting for the setup all day. Like, I think when you create too much attachment to the setup, then it doesn't allow you to be fluid and change your perspective, see the bear case, see the bull case.
So, and to add to that, when people are starting out, they've got either a limited amount of time they're trading, or they want to be profitable as quick as possible. So they'll see a strong breakout, they'll buy it, and they'll hold it for 10 bars. And just as you said, they'll think, well, I can't get out of the trade. It's, this is my only chance to make money today or whatever.
Yeah, exactly.
So they hold it, and when they should have gotten out. So yeah, you have to be totally okay. And one of the ways I like to think about it is, pick some sort of really crazy account size that you'd be okay with. If you could have that account size, and if you could, what size would that need to be for you to take one trade a week and you'd be happy? And it's probably big, but what it kind of forces you to think about is, if you're an institution, you don't care how many trades you take in a day. What you care about is how much money is in the account,
Right.
and are you taking accurate trades when you do take a trade? And Goldman Sachs they don't have to take however many trades in a day. They're way more worried about making a reasonable return and gathering money in the account. And unfortunately, that's, I know that we don't have that. We don't have that, but we have to think in that same way.
So are you saying that we should
think like an institution? You hear I'll talk about that. If you have to think like a hedge fund would think. And kind of like Al joked about, he was an eye surgeon and he started taking trades. But what he realized was, someone asked, why don't you just take trades in between surgery? That way you can keep your job. And Al said, well, hedge funds aren't doing that. They're solely dedicated to reading the market. Therefore, if I'm going to compete with them, I've got to get on their level of time. So what I'm saying is, you have to think through things in terms of, how would you trade if you had a super large account balance? And what that would, often what you'll realize is, you'll start thinking through, we often take stupid trades so we can squeeze a little bit more profit out, because what do? We say, okay, if you can make this much money in a week or in a day, you're happy.
Right.
So you start that becomes that daily goal that you have to make, rather than not caring whatever it is you do.
Right. Yeah, that's a good point. And in terms of something I found to be difficult with how my trading has progressed is that when I was taking one trade a day or two trades a day, I could easily take those trades and dissect them at the end of the day, because it's like one or two.
Sure.
But as I became more comfortable and taking 5, 6, 7, 8, 9 trades, then I'm like, how do I journal all these? How do I think through each one and give each one the attention it deserves? So do you have a journal where you keep all your trades? What metrics do you use, and kind of how do you go through your trades for the day? If you take multiple in a day, how do you give them the attention that they need to improve?
I've definitely done that off and on, and what I would say, especially, it is important. It's important to, especially when you're starting out and you're learning and you're studying, and for me, and it kind of goes in waves. Like right now, it goes in waves in terms of what I'm studying. Right now I'm looking at a lot of charts, and I'm just thinking through a lot of kind of other variables. So I'm not so focused on journaling of trades at this moment, but I have been, certainly. And what it's really helpful one is, I don't know what platform you use, but even I'll just go to TradeStation, for example. You can do the little where it'll show the dots in your entry points. Really important. If you're going to simulate or do whatever and you're learning, look at the entry points. And the first thing I would ask is, are you buying at the top of the trading range, and are you selling at the bottom? Because most people, they misanalyze a breakout where it's at the bottom of the range, and they risk too much, and it's a bad trade. So it kind of goes into, journaling is a great way to figure out, what are you doing wrong? And I'm sure most platforms have the ability where you can run what's your percent profitable,
right?
What's your average risk reward? I'd look at those too. And if you're 60% profitable and your risk reward's less than 1, that's a problem. And I would really try and focus on going for trades that have twice your risk. Because if you can at least do that, there's going to be the occasional, you're going to get 3 times your risk, 4 times your risk. or your actual risk is going to be way bigger. So if you can just focus on going from 40% profitable to 50, you've got a really good shot at doing well.
And is that
But
twice your initial risk?
Do what?
Twice your initial risk?
You want to try to get twice your risk. And
Right.
you want to be very careful in a situation where, twice your initial risk. And you want to be careful when in a situation where you have one time to risk, you want to ask yourself, how confident are you that you're going to actually get that one time to risk? If you're selling at the bottom of the range and you're thinking, yeah, it's maybe 50-50, you should probably get out.
Right. And so if you let's say you look at all your trades and you notice that your probability of success is 60, but you're 60%, but your average risk is a little bit higher than your average reward. When you see that you're risking more than you're making, and you have a 60% probability of success, and you were mentioning that's probably a little bit, that's too, it's asymmetrical. Like you're risking too much with that probability. You should aim for at least 1-to-1, right?
Yeah, so let me make sure you're saying if you're risking more than your reward and your probability is a little bit more than 60%.
It's like at 60%.
Yeah. So again, that goes back to, I think it's really important. Excel's a great tool to do this. Get comfortable with playing with numbers in terms of, if I'm risking $100 to make $100 and it's 60%, what does that give me? Because what they look at is they'll say, the whole trader's equation, probability of success times the reward minus the failure times the risk. And they'll say, oh, it's a positive number. But what they don't factor in is two things: commission and human error or slippage.
Right.
So while at 60, your scenario may be profitable, but is it profitable after commission? Is it profitable when you accidentally buy instead of sell? Is it profitable when you get slippage? I mean, that's just, things happen. And that's the one problem with, you've heard Al talk about in the trading room in the webinar, if you had a kid that got a D in college, would you be proud of them, even though that's the minimum to graduate? Or if you had a, minimum wage job, you want to be proud of that. And not that there's anything wrong with that, but that's, the minimum is not the best route.
Right.
So
sorry, go ahead.
No, you're good. You're good.
If you let's say you go through your stats and you have a 60% probability and let's say 1-to-1 or a little bit under, risking a little bit more, how do you dissect that? Do you go into all the trades and say, these are the biggest trades I need to remove? Or like
no, I think that kind of, it gets dangerous into cherry picking. What does everyone do? They take a bunch of simulated trades and they look back and they say, oh, well, that was dumb. I wouldn't have done that the next week. So therefore my probability would have been this. Or they start taking pieces away. Well, the fact is you still did them. We look back and say, oh, I got emotional and couldn't get out of that trade because of the risk. Therefore, I know I won't do that next week. So I'll remove it. And what I would focus on if someone's in that scenario where it's 60% and, maybe the risk reward is 1, or maybe it's, they're getting a little bit more than their risk, is you have two choices. You can either focus on higher probability trades or increasing your risk reward. Right. And it's kind of a balancing act. And, the way I would put it is you increase your probability by managing the trade. And that can be scaling in, that can be a wide stop, that can be being more discretionary with the stop entry. That's how you manipulate probability. Right. The risk reward is easier because it's just increasing your target, right, or lowering your stop. So it's a subjective question. It's, I would highly suggest that it's easier to go for a better risk reward than probability. Now, the problem with that also is people take that too literal and say, well, if I just take every stop entry, I'm profitable. Well, again, the more stop entries you take, the closer you are to 50% or 40%, the more times you're going to take losses. So you don't want to lose 4 times in a row and have one stop entry work and cancel everything out. So it's balancing act, but I would say it's, and the reality is if you're good at looking at breakouts and trading breakouts, you're going to have, you can get higher than 60% buying a breakout and getting out, at 1 or 2 times your risk. I mean, if you look at think through strong breakouts, I think we had a a Fed report this week, and if you look at it, I'm pretty sure it rallied. It went down and rallied up, but if you look at it, if you bought one of those breakouts, you quickly got many times your actual risk.
Right.
So you're getting a high probability with 2 or 3 times your actual risk.
Okay, that's a good segue into some chart examples. Are you okay with?
Yeah, you can go to
showing
share
the charts and you kind of
Sure.
talking through them?
Yeah.
Should I guess I'll share them because.
Yeah, you can share.